What is up, Bitcoiners? Welcome to another episode of Fed Watch. Ansel and I have an action-packed episode for you. Ansel has updates on all the major central banks, and we have some reactions to big news that happened last week with MicroStrategy, MassMutual, and other big players getting into Bitcoin. Before we get into the show, let's talk about our sponsor. The sponsor is LVL.co. This is a new type of way to bank with Bitcoin. This is a challenger bank style company. It's an FDIC insured USD bank account that is right alongside a Bitcoin wallet. And you can transfer between Bitcoin and USD for no charges whatsoever, no hidden spread, no fees at all with LVL.co. And that is not it. They are planning to be the way that you bank on Bitcoin, and you want to get paid in Bitcoin. Down the line, they're going to make it so that you can just get your paycheck direct deposited into that FDIC insured bank account, and it's automatically transferred into whatever ratio of Bitcoin and USD that you want. So if you really want to go 100% Bitcoin, imagine just getting your paycheck into your level account, and then boom, it goes 100% into Bitcoin into that wallet. They have a ton of amazing features. Go to lvl.co and let them know that we sent you there by putting in promo code BTC Media. Again, that is promo code BTC Media, so that way they know we sent you there. All right, Ansel, that is enough of me. Let's get into this show. You have a lot planned out for us here, and a lot has been going down with these central banks. How do you want to start?
Yeah, I just have a few articles here. I will put everything in the show notes for people. We're not going to go through in super detail, but I think it's good to kind of get an update on what these central banks are doing. In August, September, October, the economy started slowing down and turning back over again with maybe a second wave of the virus hitting. And so the PBOC and ECB in particular are having trouble. So I wanted to go over what's going down with them. And as far as the Fed, I just have one article here, and they're meeting. Let's see, today's Tuesday. We're recording this on Tuesday, so they're going to be meeting on Wednesday, and people are not expecting any policy change whatsoever. The big thing is going to be just some rhetoric, like the language that they use in their releases. Is that going to change, and what's that going to kind of signal to the market going forward? So that's the big update on the Fed. Should I just keep going?
Yeah, well, I mean, it feels kind of interesting because this is like that transition period. It feels as though there's going to be a transition to a new administration. Again, there is still a little bit of uncertainty exactly how that's going to play out, but there's just been rumors that the Treasury in particular, not necessarily the Fed, is going to have some sort of drastic exit, right? Where they're going to be making some lasting changes on Bitcoin, on other things. So it's interesting that, at least from a Fed perspective, the expectation is that nothing is going to happen from it.
Yeah, the Fed tries to be as apolitical as possible. They want to try to stay above the fray, and they think that helps their messaging, right? But I don't know. The ECB is not above that, and we will see that in the next couple articles here.
Yeah. Let's roll into that. And do you want to share your screen?
Yeah, I'm gonna see if I can figure it out real quick.
No rush.
Share screen. It's a big button. Okay. So the ECB met last week, and they came out with an expected increase in their loan program that they're doing to recover from the pandemic, quote unquote, recover from the pandemic. They increased it by 600 billion euros, which is a crazy amount. The total now is up to 1.85 trillion euros, which, as a share of their economy and a share of their monetary base, it's gigantic, even compared to the Fed. So you would expect inflation, right? But we actually see the opposite of that right now. They have the lowest or the worst deflation in the history of the euro. They're stuck in this debt trap at negative rates, and it does not look good for the ECB. Anything to add to that?
Well, I mean, let's just kind of build on to the fact that these central bankers don't know what they're doing, and they have prepared to fight inflation. Everything that their mandate is kind of centered around is about this fear of inflation. And here they are, and deflation is the black swan that they have no tools to protect them against. And now that deflation has appeared as the true enemy that they are fighting against, they don't know what to do. They're kind of caught flat-footed.
Exactly. The seems like the more they do, the worse it gets. They are actually impairing the economy, impairing the recovery, and yeah, it's just crazy. The one thing that the ECB kind of said in their statement that I thought was surprised by is they used the word symmetry. Now, this is really creepy for central bank nerds, but the Fed has a symmetrical target of 2%. So that means that they fight inflation if it's too high, and they fight if it's too low because their target is 2%. But the ECB, they had just a one-sided mandate where they only fought inflation if it was too high. That had been that way for years. But now, just in this statement, they use the word symmetry. So they have an eye on the deflation. They have an eye on the value of the euro, and they want to target that 2% inflation with symmetry, which I thought it was really interesting from a central bank nerd perspective.
Yeah, well, I mean, I know that we've talked about the different mandates on this show, so it's interesting to see that, if they'd been listening to FedWatch, they may have been a little bit ahead of the curve on this difference in the fact that they need to be watching out for deflation, and their mandate should be two-sided. What's next?
Okay, I have another article here about the ECB, and this is also about their dilemma. We don't have to go too far into this, but I thought it would be good to share. Okay, so the ECB's policy dilemma: more QE will strengthen the euro, and this is one thing I've been saying for a long time. This is from Seeking Alpha for those podcast listeners. People go watch us on YouTube, and you'll see all of these articles. But so they're stuck in this dilemma. They can either pick a cheaper euro and less deflation, or more inflation, or a stronger euro, higher real interest rates, and a weaker economic performance. So they are really trying to stimulate their economy. They want to force somehow the euro down, but everything they seem to do seems to strengthen the euro. And this article walks through some of the stuff we already covered about their recent policy decision. But I also thought it's really interesting. People are starting to say that debt is deflationary, QE is deflationary, which is a huge turn. That is, you never would have heard that last year. Maybe just Jeff Schneider. That's about it for the last few years. But now people are starting to see it more and more. So from this article on Seeking Alpha, debt is deflationary, and an ever-growing debt load has compressed the rate of inflation in Europe and the United States. Negative interest rates have disastrous consequences for the banking system and society more generally. However, highly indebted economies risk a balance sheet deleveraging and or massively weaker economic performance if the real interest rate settles above the equilibrium rate. Okay, blah, blah, blah. The ECB has a major policy dilemma due to a massive debt burden that is crushing the inflation rate. Inaction, or simply adding to the existing QE program, will not move the needle on the inflation rate across Europe. That's a pretty big admission, I think. And this idea is starting to permeate through the financial literati, I guess you might call it. He goes on, it's not easy to fight a currency war. It's even harder to fight a currency war with an over-indebted economy. And it's even harder still to fight a currency war when the global economy has reached its limit as to how negative interest rates can go. I'll add there as well that it's not just interest rates being negative, it's also that the entire global economy is riddled with debt. So there's no place to add more debt. everybody's stuck in this deflationary trap. Okay. And now I'm done. What do you think about that, Christian?
This is extremely, extremely interesting. And I feel like for a lot of Bitcoiners, it's a no shit. Like we've already known this, but it's like the world is waking up in front of our eyes, right? And
Mm-hmm.
what's the next logical conclusion, right? It's typically we need an alternative system. What's the next best thing? What's gold 2.0? So I think this awakening to Bitcoin's relevance is extremely bullish. And I mean,
What do you think?
gradually and
Would
then
it,
suddenly, right?
yeah, would it drive people to CBDCs? That's one of the things I think too, is that people might start viewing CBDCs as this replacement, because they don't want to give into Bitcoin quite yet. That will happen eventually, but they don't want to
Yep.
do that quite yet. And so CBDCs are kind of a stopgap to a new system. What do you think about that?
Yeah. So, I mean, maybe, but we've talked about this so many times on this podcast. There's so many barriers for them, right? The ECB, a lot of these central banks think that just slap on, central bank digital currency, we'll mint the digital currency ourselves, and all of a sudden we'll be competitive, right? And they're talking about the wrong things. They're just talking about payments. Like nothing that they're saying makes me think that this is going to actually compete in the market, right? Against Tether, against other crypto dollars, and against Bitcoin. Like that's what the central banks have to compete against, because they no longer have their geography to kind of give them a geographic monopoly. Like now that they're onboarding to the internet, those network effects are showing their weakness. So I just don't see, like, maybe they'll try, but is that going to attract the consumer to CBDCs? I don't think so. Like I think it's going to be an uphill battle for CBDCs.
Yes, I very much agree. And it remains to be seen if they even make a difference, if they even can be a different system. That goes into our next story. Are you ready for that? All right. The next story is about the digital yuan. And there was a former PBOC chief, the People's Bank of China chief economist or something, that said that the digital yuan is not trying to replace the dollar or replace cash or replace the euro. So I thought this was really interesting. The Chinese government is not seeking to replace existing fiat currencies with its own digital currency, according to a former governor of the People's Bank of China. Also known as a digital currency electronic payment, or DCEP, China's digital yuan is purely designed to transform cross-border trade and investment, Zhao said. Then he compares it to Facebook's Libra. Zhao went on to say that China learned a lesson from global regulatory pushback to the Libra project, with regulators fearing that it would disrupt financial systems and monetary sovereignty. We must avoid the perception of great power chauvinism, he says. You guys can see it in the link I'll provide in the show notes. Read on the rest of this. But really, it's all about payments. It's not about a new kind of form of money. They are stuck on the payments side of things, like I've said over and over again. But interesting that they're kind of backing away from a strong stance on this CBDC project. Thoughts, Christian?
Yeah, I think Jeff Booth said it perfectly on this show and on many others. But what happened to Blockbuster when Netflix changed the game? They added candy to the candy store, to their aisles, right? They try to like add value. They try to be innovative in hindsight, but it was too late. The game was already changed, and that's happening to all of these countries. And I mean, they're just coping at this point, like, and they're trying to sell it in whatever way they think is most palatable to the group of people that are going to be disrupted. So it's just kind of funny, like we learned from Libra's mistake. We have to we have to package this thing in a way that it's going to be palatable. I guess, I mean, that's good marketing, but ultimately, like, I just can't see how this approach doesn't get disrupted severely by Bitcoin, right?
Yeah.
And I mean, that's what open source permissionless innovation does. And the best thing is that they're still talking and Bitcoin is in operation. Bitcoin is being adopted by major corporations. Bitcoin is in, it is in the zeitgeist. The world knows about it. The educational journey has been, forged by Bitcoin. So I just don't see how any of these things catch up.
Absolutely, 100% agree. Bitcoin is not stopping. Like you like to say to Ethereum people, what do you think Bitcoin's going to be doing while this is happening? So yeah, Bitcoin is moving faster than they are. I have two more articles on the PBOC, but I'll just cover it. We don't have to like go through them in detail. Again, I'll put them in the show notes for people. Um, it's pretty much saying that over the last few months, there has been a rising amount of defaults over there in China. Even state-owned enterprises are having a hard time, and they're looking to the government, the PBOC, to bail them out. The PBOC has let several of them fail, but they also have upped. I think it's up to roughly 160 or 180. I can't remember off the top of my head. $1 billion a month that they're doing over there in China. So China is having problems. Europe is having problems, and all along the U.S. is kind of not doing anything. They're waiting for the next shoe to drop, I think, before the Fed moves. Anything to add,
Yeah.
Christian?
So, I mean, I'm not surprised. And you have been saying that China is going to be having a lot of issues. I guess, can you kind of dive into um, the background of China's situation? Like, why are all these defaults happening? Why does it seem like their economy is in shambles when probably to normies, like China is this strong enemy?
Yeah, we covered it once on the show where we read like the PBOC mandate or something. That was one of the first episodes I was on. And their modern structure is only about 20 years old or less. I think it's 2003 is when the PBOC got their modern structure. So the banking system in China was very immature and very young. Uh, and then throughout, like I would say, the 90s into the 2000s, they started getting more mature types of financing, more debt, building out their economy. And so I think that they have just been flooded by debt over the last 20 years. And now they're coming to the realization, just like the ECB, they're stuck in this debt trap. They can't get out of it. The debt burden is too high. They're starting to see defaults. And, that my personal opinion is that's going to spell disaster for the CCP, but we'll see how this develops. I think China, out of all of the three major central banks that we talked about today, is probably in the worst shape because they're the most over indebted, and they are, I don't know, I would say they have the least tradition in their current form the way it is, right? And so they're going to have problems without major changes going forward in the future. That's my thought.
So just to play devil's advocate, couldn't you argue that sure they have these major problems, but the one thing as a central organization, a central decision maker that they do have in their benefit is true decision making power, like through and through decision making power, whereas like the ECB and the Fed, yes, they're powerful institutions, but they do kind of have some sort of, some sort of consumer as well as regulatory hurdles that they have to overcome over time, as well as tradition and a mandate to overcome. Whereas the Chinese, the Central Bank of China, they can pivot, quickly. At least that's what it seems like.
Yeah, but then you get into central planning, the problems with central planning. It's going to be, you might get lucky and pick the right thing once or twice, but eventually the dislocations within the economy, the price signals will get so out of whack that you won't be able to make proper decisions anymore. So I think that's another thing they're coming up onto is just central planning and economy is not sustainable long term. So the less central planning you have, the more sustainable it will be. So I think that the Fed and the ECB, they try to do a lot of central planning, but it's less so than, I mean, China has state-owned enterprises. I mean, what's half their economy is state-owned enterprises. So it's a top-down, centrally controlled, planned economy, and it is not stable.
So what's next for the ECB and the Fed, though? It seems as though we are now entering a world where even in Western countries, there's this massive expansion of government, massive expansion of the executive. So essentially, top-down decision making. Um, you know, People have rumored the combination or the merging of the Treasury and the Fed. Like, will governments move in China's direction as the people and as technology kind of decentralizes and disrupts?
Um, maybe, maybe, but there is also a populist movement around the world that is trying to, get rid of a lot of these central planners. So, um, I think the political structures are what's at most risk. So the political structure in China, the political structure in the ECB, even or in the Eurozone, even in the US, the political structure, we've seen how, the court system doesn't really function the way we thought, and neither does the election process itself doesn't quite function the way we thought it did. And so I think there's going to be a lot of political change that comes before any like monetary change. But overall, I think I still remain a dollar positive against these other currencies, the dollar milkshake theory sort of thing from Brett Johnson. And yeah, that's how I envision it going forward.
So there's going to be two systems. There's going to be the dollar system and there's going to be the Bitcoin system or the permissionless system, right? Moving
Yeah.
forward. Um, we'll see where CBDCs can fit into that. But Ansel and I kind of agree that that's where the network effects lie. So talking about obviously the dollar is entrenched. It's the unit of account. It is the global settlement currency. But Bitcoin is making moves, right? And Pierre Richard wrote an article back in 2014 saying that the way that hyper Bitcoinization is reached is through speculative attacks. It's through individuals, corporations, institutions taking out debt denominated in the fiat and using that to acquire Bitcoins, with the assumption that they're going to be able to pay back that fiat in the future with their Bitcoin gains, and they're speculating that they'll be able to to ride Bitcoin up, right? So individuals have been doing this. Maybe small private institutions have been doing this kind of speculative attacks, little cuts to the dollar for years. But last week, MSTR MicroStrategy issued a 5-year bond, private convertible note that was oversubscribed to. They were asking for 400 million. They got over 625 million to buy Bitcoin, and they issued it saying, "We will buy Bitcoin with this." I think it was less than a 1% interest rate as well. So really
Yep.
unbelievable, what the market is allowing in terms of debt issuance right now. This is just the beginning. Nick Bhatia calls this arbitrage. He says this is not this is not a speculative attack. This is just arbitrage. Bitcoin, for if you look historically, if you hold Bitcoin for 5 years, you're in the green. So that's what Michael Saylor is betting on. He doesn't have to pay this back for 5 years. So I mean, what are your reactions to this, and what do you think we're going to see moving forward?
Oh, well, I think it's fascinating that this is happening in front of our eyes, that we get to watch this. It's the one of the best times to be alive, for at least studying money and studying monetary things. Um, I think that this will continue. It'll get bigger. The emerging market currencies are in deep trouble. Even the euro, like we just have been talking about, the euro, maybe not the yuan, because they will be having more of a authoritarian control over that currency. But yeah, it's going to hurt a lot of currencies, and this will probably continue to grow. I mean, I always used to call this a carry trade. I think this is the same thing as a carry trade, and I guess a speculative attack is better rhetoric because that sounds really flashy and it might trigger some people. So I like that terminology. So I don't know. It's exciting. I can tell you that. You probably know a lot more about the ins and outs of what's going on in this particular field than I do.
Well, I don't know much, but I definitely talk to a lot of people who know plenty. So make sure you're following all the podcasts at Bitcoin Magazine. Make sure you're following all of our content at Bitcoin Magazine. But yeah, I recently interviewed Nick Bhatia, and he gave some very detailed analysis on this. Watch that. Watch out for that video and podcast. It should have already dropped on BitcoinMagazine.com. But there's some really great analysis there. Also, kind of following, right on the heels of MSTR pulling this off, MassMutual, a major insurance company in the United States, used a company called NYDIG in order to acquire $100 billion worth of Bitcoin as part of their, insurance fund, right? So their massive treasury of assets to back their insurance liabilities. So this is a pretty big move too. What are your comments there?
It's a huge vote of confidence. I mean, this is a well-respected insurance company. Like you said, it's one of the biggest in the world. I don't know the exact comparison to other insurance companies, but it's very old and very big and well respected. And the fact that they want to take a bet on $100 million worth of Bitcoin with a saying that they might buy more in the future, that is a huge vote of confidence for Bitcoin in general. And yeah, the virus is spreading amongst these types of people right now.
Yep, absolutely. And kind of on that same tip, NYDIG, they are emerging as it seems like a very solid, custodian financial services group for onboarding these big customers. But they recently onboarded another kind of fintech challenger style bank. It's called Quontic. So Quontic is a fintech challenger bank, an online challenger bank that offers, higher savings account rates and cheaper checkings rate and, no fee debit cards, stuff like that. And they partnered with NYDIG in order to create a 1.5% Bitcoin backed debit card. So this is a company that's not involved in Bitcoin at all, just a challenger bank, and they're rolling out a Bitcoin backed rewards card as just a consumer product that they're marketing to the world. So they're using the infrastructure that MassMutual used, that other players are going to use, and I would not be surprised if by the end of 2021, literally every single consumer bank had some sort of Bitcoin product, whether it's a debit card or a credit card. Like, it's going to happen real fast, and it's going to start with these challenger banks. But um, Bitcoin is a product you can make money on. Like, the benefits of the Bitcoin economy, the growth that you can find in the Bitcoin economy, that's a narrative that you've been talking about. Companies are figuring it out.
Yes, growth is going to be contained in Bitcoin land, not in the traditional markets, the dollar denominated markets. It's just going to be stagnation in the Eurozone. It's going to be stagnation in China. And the Bitcoin economy is going to look extremely attractive at 1.5%. I mean, what? So that's your reward. You're saying that when you spend your dollars, you get 1.5% cash back, but it's Bitcoin. So you get
Yep,
some
Bitcoin
sats
back.
back. Okay. Yeah.
Exactly. But this is like, it's not
Yeah.
like Fold. This is on the heels of Fold. This is just some random online bank.
Mm-hmm.
Like,
Some forward thinking people.
yeah, when's Barclays online bank going to roll this out, right? Like, all of these companies have some sort of like online bank like this. And they're just doing whatever to get an edge. They used to be able to have a 3% interest rate on their savings account. Like, that's gone now. Now
Mm-hmm.
that's like 1%. Like, they're not even competing with anything. They're like scrapping for something they can offer.
Yep. Yep. And man, it's such a great selling point. So I'll probably go open up a card today. No, I'm kidding. But yeah, it's and like I said, it's an exciting time to be alive. I don't have much to say about this particular topic because for me, I've expected it for so long, and it's coming, and I'm like, oh well, yeah, of course. Why wouldn't they do this? What it's and so I don't know. It's great that it's happening, like people say, slowly then quickly, or what is it? Gradually then
Gradually, then
suddenly.
suddenly.
So,
Yeah.
yeah, so that's happening now, and hey, we Bitcoiners have been saying it for as long as I've been in, that this is coming. So people just need to wake up and stop listening to Peter Schiff on Twitter.
If you go back to Pierre Richard's speculative attack article written in 2014, it reads as if it was written today, straight up. Just read
Yep.
that. And that just shows you Bitcoiners have been talking about this for a very long time. Um, Ansel, that's all I got for this one. Anything to add it out? What's your last word?
Nope, that's all I got. Thanks, guys, for listening. Should we tell them our plans for the coming weeks?
Yeah, absolutely. So we're going to be taking a break next week. There's going to be plenty of Bitcoin Magazine podcasts going out still. So have no worry. There's going to be lots of audio content, but we'll take a quick FedWatch break. Ansel is going to be writing an article kind of breaking down what all the major central banks have done throughout 2020, dropping that on Bitcoin Magazine the week after Christmas. And then we are going to be doing a audio kind of reflection on that piece with the next Fed Watch in 2 weeks. So that's what is coming down the line. Want to remind you guys that we have a new Fed Watch feed. We are having a little bit of issues with Spotify, but we're figuring it out. But it should be live on Apple and Overcast and everything else. So go over and subscribe to the new Fed Watch feed. That is where Fed Watch is going to be living in 2021 moving forward. All right, guys, you can find me at CK_snarks. You can find everything for Bitcoin Magazine at bitcoinmagazine.com. Ansel?
At ansellinder.com and bitcoinandmarkets.com. That's my other podcast. Thank you for listening.
Peace.